Bitcoin just dropped straight through its 200-week moving average, the line that normally holds bear market bottoms. Strategy's STRC is breaking down into the 70s. MSTR stock just printed its lowest price in 3 years. And the rumor getting louder by the hour is that Michael Saylor is about to get liquidated and the Bitcoin death spiral has officially begun. Meanwhile, it looks like the biggest bubble in history, AI, might be starting to pop. Will it drag Bitcoin all the way down with it? Today I'm going to slow this whole thing down and do the one thing nobody's screaming death spiral has actually done. Let's check if it's real. This is Truth Block. I'm Hurley. Let's mine truth. Quick thing before we get into it today. A huge chunk of you watching right now are not subscribed. If this show gives you a signal in a week like this, hit subscribe to Simply Bitcoin. It costs you nothing, and it's one of the easiest ways to support the channel and the peaceful Bitcoin revolution. All right, let's go. I'm wearing my laser-eyed bear shirt, and the 58K gang is officially back from the dead. Last cycle, this price was a magnet, and here we are again, except this time we got here on the way down instead of the way up. And with this recent wick lower, a record 10.8 million coins are now held at a loss. And a huge chunk of the selling has come from the ETFs. The headline says Wall Street's finally heading for the exits, but I'd push back on that. I don't think these ETF holders were as institutional as we were sold. The real institutions have a toe in at most, which makes these outflows look a lot more like retail capitulation than smart money leaving. And here's the part I want to say plainly. The average price every holder paid, which is the realized price, sits around $53,000 right now. And in just about every past bear market, Bitcoin has dipped down and tagged that line. So it is very possible we see a new bottom in the low 50s. In my opinion, the longer we sit under the 200-week moving average, the better the odds we go touch the realized price. But I want to be really clear about this. Even if we visit the 40s, it still would not spell a death spiral. A 50+% drawdown is a Tuesday in Bitcoin. We've done this over and over and over. So where does death spiral even come from? It comes from one specific fear. Saylor's strategy holds over 850,000 Bitcoin. STRC and MSTR are cracking. Saylor gets liquidated, and a liquidated Saylor becomes a forced seller of hundreds of thousands of coins into a market with no bids. That's the avalanche. That's how you get a headline that says Bitcoin at 10K. If Saylor and strategy truly had liquidation risk, it would be terrifying, but still not a death knell for Bitcoin. Good thing for us, it isn't a risk at all. Adam Livingston ran the numbers this morning, and they pretty much end the argument. Let's go back to the bottom of the 2022 bear market after FTX imploded. At that moment, Strategy's debt was worth more Bitcoin than the company ever held. So the common stock's exposure to Bitcoin wasn't just low, it was negative. On paper, shareholders were past zero, and the stock did not go to zero then. There was no liquidation. Saylor wasn't forced to sell a single coin. The company walked straight through the worst collapse in crypto history. Now look at today when Strategy holds nearly 850,000 Bitcoin. Subtract every senior claim, and the common shares still have positive exposure to almost 496,000 coins. Per share, that's about $82 of Bitcoin sitting under a stock trading in the 80s. Back in 2022, that number was negative $2. Today, it's a positive 82. Livingston called the balance sheet built for war, and the math backs him up. So here's where people are getting it wrong. The $25,000 level everyone points to is just where the common shares get squeezed to nothing on paper. And that already happened in 2022 with no forced sale. A preferred like STRC is perpetual. Nobody can call Saylor at 58,000 and demand the coins. And the debt doesn't come due for years. Scott Melker put it cleanest. Forget liquidation. The real question is duration. Can strategy stay standing long enough for Bitcoin to recover? And as long as the capital markets stay open, it can. Saylor's the easiest name for a scared market to hunt. It makes sense that the biggest holder is the biggest target. He's the hero in the bull market and the villain in the bear market. And that flip tells you more about the market's mood than about his balance sheet. And since we're talking about getting liquidated, that fear only ever comes true when somebody else controls your collateral. That's why I use Ledn. If you need dollars but you don't want to sell your stack, Ledn lets you borrow against your Bitcoin, and your coins are never lent out and never rehypothecated. With Ledn, you stay in control of the liquidation risk, not some trading desk playing games with your sats. And borrowing when Bitcoin's beaten down under its long-term average is the smart end of the cycle to do it, as your downside is already compressed. So check out Ledn today at learn.ledn.io/simply. Okay, let's step back from Bitcoin for a second because it isn't the only thing bleeding. Stocks are down hard. The Nasdaq just gave back its whole year in a few sessions. Even gold and silver have been beaten hard lately. Gold is now sitting below its own 200-week moving average by the widest margin since 2022. So when stocks, metals, and Bitcoin all sell off at the same time, it's rarely about any one of them. So the real question is what's at the center of it? And a lot of fingers are pointing at the trade of the decade, AI. For that, I want to bring in perhaps the most credible bear alive. This is billionaire investor Jeremy Grantham on Diary of a CEO.
Well, first of all, let me say, I think artificial intelligence is right up there with the railroads. It's one of the defining great ideas of the last couple of hundred years. It's going to change everything. And that is critical. If you mean to have a bubble, people think that a bubble is mainly because it's a scam, and nothing could be further from the truth. The great bubbles always occur around the very most important ideas. So the railroads, everyone could see that it would change the world. And everyone wanted to put their money in, and everybody put their money in. They overinvested, and even though the railroads were a spectacularly powerful idea, the railroads collapsed as stocks, and everybody lost a ton of dough. The same with the internet. And then out of the wreckage, the railroads changed the world, and the internet changed the world. In '99, Amazon went up 6 or 7 times. In the crash, in the tech bubble, it went down 92%. As I like to say, check it. It's such a remarkably large number. And then out of the wreckage, it inherited the retail world. And that's how it works. The greater the idea, the more obvious the idea, the more money goes in, and the bigger the bubble, and the bigger the bust.
And are we on the verge of a collapse with AI? And when I say verge, I mean over the coming years.
If you look at the data, it would be compatible with history for the peak to be very soon. Everything is in line. This is, I think, the biggest investment bubble in American history. The indicators of a pure, crazy euphoria, like SpaceX, are all over the place.
Grantham has 60 years in markets. He called the dot-com top, he called 2008, he called the Japan bubble. So when he says AI is the biggest investment bubble in American history, we should take it seriously. And for what it's worth, I think he's right. But what he's pointing at is the fragility baked into every fiat-priced asset. A true idea doesn't save you from the bust. But watch what happens when you point him at Bitcoin.
You didn't use the word crypto when you were talking about investment strategies. How much crypto do you own?
None.
Have you ever owned any crypto?
No.
Will you ever own any crypto?
No.
Will you ever advise anyone to buy crypto?
No.
Why?
I think it's an unnecessary piece of nonsense. It facilitates nothing except criminals moving money, so they can't be seen. It's not a store of value since it bounces around all over the place, just down from 120 to 60, because it felt like it. So it's not stable, it's volatile as hell. It's not used conveniently as a medium of exchange. You can't go into a shop and use it easily. It does one thing very, very well. It's a means of speculating beautifully.
Do you think Bitcoin's going to go to zero?
Well, in the distant future, yes, it will certainly go to zero, but it may take a long time. And in the distant future, everything goes to zero.
So the same brain that nailed every bubble looks at Bitcoin and sees criminals, gambling, and a thing that bounces around too much to be money. That's the same crypto casino lens Bitcoiners have been taking apart for years. He trusts gold because it's scarce and physical. He's standing 1 inch from the answer, and he can't take the last step to the hardest money ever built. And he's not alone. Philippe Lafont runs one of the biggest tech funds on the planet. Here's his read on Bitcoin on CNBC this morning.
I don't know what to think about Bitcoin anymore. I wonder if Bitcoin was a little bit sort of the off-ramp for everybody that wants to have something a little bit more speculative.
Yeah.
Now that we have these big IPOs on one side, and then we have stablecoin on the other, and stablecoin involves the word stable. So if you really want to just put your money offshore, put your money in a new system, you can go through stablecoins. And a little bit what you need to believe is almost this maximalist view about Bitcoin. Like when I speak to people about Bitcoin, it's a bit like a cult. You're either in or you're not. There's fabulous IPOs coming out. There's SpaceX, there's going to be some AI. I would rather bet on, is space going to quadruple over the next 20 years? I find that debate and trying to figure out which of those companies might be a $10 trillion company sort of easier for me than figuring out where's Bitcoin going to be in 10 years.
A billionaire tech investor would rather park his money in a stablecoin, a dollar IOU, the exact thing Bitcoin was built to escape. And he calls Bitcoin a cult. And he'd rather bet on the AI names Grantham just called the biggest bubble in history. That's the quote-unquote smart money at the bottom, running out of the scarcest asset in the world straight into the bubble. And it's not just the billionaires. Dave Portnoy, speaking for every retail guy who's had enough, just said it flat out. It seems like this thing's going to zero. So top of the market down to the last guy at the bar, the misunderstanding is identical. None of them have ever learned what Bitcoin actually is. And that's the whole job, teaching what Bitcoin is. So the next time the screen is bleeding, you already know what you're holding. Because every single one of these takes gets the same thing backwards. Fiat is going to zero, not Bitcoin. So let's go there. Back to basics. Why are we really here? Jack Mallers made an amazing speech at BTC Prague this year, and I think it's the best answer to this question I've heard in a long time.
This is kind of the energy that I would describe we all have. Is there enough room for me in this world, in the future? What is the future going to consist of, and is it going to be good for me? And there's a lot of data that backs this feeling that we all share. This is the consumer sentiment measurement by a university in America. And the consumer sentiment, how we all feel, has never been lower. It's been lower than COVID, lower than the 2008 financial crisis, lower than the dot-com bubble crash. People have never felt worse. They've never had worse sentiment. Our real wages, our real earnings are declining. Inflation is back. And even if you're getting a raise right now, your money's buying you less stuff. You're getting less food, you're getting less housing, you're getting less vacations. On top of all of that, we now have this AI thing. This piece, US workers are more worried than hopeful about the future of AI use in the workplace. This was a study conducted. 77% of people think that political chaos will be caused by AI. 71% think AI will take their job. 66% of people think AI will replace the need for in-person connection and real relationships. And 61% of people are really worried about the energy that AI consumes. On top of that, more of our young adults, our children, are living with their parents than the Great Depression. And even worse than that, not only are they struggling financially with rent, with an ability to afford their own life, but they're struggling mentally. This is depression by age group. 1 of every 5 of our children are depressed. In 2023, the CDC found that 40% of child students had feelings of sadness, and this part makes me terrified. Hopelessness. Hopelessness is a devastating emotion. No hope for the future is terrifying. 20% of those students considered taking their own life, and almost 1 in every 10 of our children tried to take their life.
Mallers is right about the symptoms. The hopelessness is real. The numbers on young people, the depression, the kids who've thought about or are ending their lives, these are real, and they should stop everyone cold. And I think he's right that broken money is tangled up in it. When you can't save, can't afford a home, can't picture a future, despair starts to make sense. But here's where I gently push back a bit. Mallers makes it sound like the broken money is the cause. I don't think money sits that high up on the chain. The deeper sickness, I think, is spiritual. We're disconnected from each other, from meaning, from our creator. And broken money is one of the symptoms of that. And then it pours gasoline on the fire. Fix the money and you pull one big rotten root out of the ground. But you don't heal the soul. So even on a show about honest money, I'll say it plainly. Don't put your hope in money. Not even the best money. Money is a tool to build with. It was never meant to be our savior. That said, the money absolutely did change. And it changed at a specific moment. In his talk, Mallers points to a researcher named Peter Turchin, a mathematician who tracked American well-being and watched it roll over in the 1970s. So what happened in 1971? You all know. Nixon cut the dollar's last tie to gold. After that, the line split. People kept getting more productive, and their wages went flat. $1 you saved back then buys about 12 cents of stuff today. The floor came out from under everybody. And the craziest part of the whole story is that they told us they were going to do it.
What were we promised? How did we get here? Who made what mistake? This is a quote. I'm not going to tell you guys who said it yet. Beware, the time for all this is not yet. For at least another 100 years, we must pretend to ourselves and to everyone that fair is foul and foul is fair. Do you guys know who said this quote? It was Keynes, the inventor of fiat currency. He wrote this in 1930, and his point was, we're going to have such an abundance from technology. All this growth, all this innovation, all this stuff humans are creating, we're not going to need money anymore. And for the time being, between now and then, we have to pretend that fair is foul and foul is fair. That was his point. And so Keynes imagined a world where machines solved for scarcity and liberated human beings from toil. He thought that productivity alone would free us. More machines, more output, more abundance, and eventually we would stop worshiping money and start living amongst each other. The problem is, cool idea, bro. The problem is we kept our end of the bargain. We worshiped their money. We called foul fair. Oh, inflation isn't your fault, it's our fault. Oh, I'm supposed to produce more but earn less? Oh, housing is supposed to get unaffordable and I'm supposed to be okay with it? We took you up on that. We listened. We said, okay, we'll believe in government. We'll believe in institutions. We'll believe that you guys have our best interest. But the problem is that the 100-year detour became permanent. Technology did create abundance. We did create the internet. We did create the car. We did create the plane. We are flying around the world, talking to each other on the World Wide Web. We did those things. Government did not do those things. Central banks did not build that. But they never made their end of the deal real. Scarcity was never really invented. Assets inflated, fiat currency stole all of that productivity from us. And so this quote you guys know from Hayek, I don't believe we shall ever have a good money again before we take the thing out of the hands of the government. That is, we can't take it violently out of the hands of the government. All we can do is by some sly, roundabout way, introduce something that they can't stop.
The lie was scheduled in advance, and the man who fought Keynes named the escape hatch before it existed. Money they can't stop. That's the floor LaFont can't find when he asks where does Bitcoin even fit. It fits right there. It's the exit Hayek told us we needed, which leads to a question most people never deal with until it's too late. If you do own the real thing, what happens to it when you're gone? That's where the Bitcoin way comes in. They sit down with you one-on-one and get your self-custody set up right, safe from theft, safe from your own mistakes, and set up so that it actually passes to your family instead of dying with you. The whole point of this is what we leave behind. So get a free consultation today at thebitcoinway.com/Hurley. So the question that actually matters in a bear market is simple. What are you building? And who are you building it for? That's exactly where Jack Mallers landed at the end of his Prague speech.
And I think we all now have a choice because of what Satoshi created, because of AI, because of all of you in the room. You know, Bitcoin is a project that is carried by, defended by, and ultimately will succeed or fail on us, everyone in here. The Stay Humble Stack Sats, the little DCA, the excess cash that you had, the startup that you're building, the customer support ticket that you're helping out with. We make or break whether this is going to work or not. And because of what we're doing and what we're building and the fact that we're all here, we have a choice to choose building, to choose education, to choose family. I couldn't imagine a life without Bitcoin. I don't know if I would be engaged in thinking about kids. I don't know how hopeful I would be about my future. And so I think that civilization is a partnership between those before us, those that are dead, those that are living, and those that aren't born yet. And they built so that we can be here. And I think that we have a moral duty to build for our kids. They gave us paper money and paperwork. That's true. There's nothing we can do about that. We didn't really have a choice. However, because of the technology we have access to today, I think we can give our children Bitcoin and cathedrals. I really do.
We didn't get a vote on the paper money we inherited, but we get a vote on what we hand down. We can give our kids honest money and the things worth building on top of it. So is this a death spiral? No. A death spiral is a fiat event, a currency printing itself into the grave, leverage stacked on leverage until the whole thing snaps. Bitcoin has no mechanism like that. STRC isn't a paper coin that can break a peg, and Saylor, like we just walked through, can't be forced to sell. What you're actually watching is the same shakeout that ends every cycle. The most credentialed people in the room are telling you it's over. They said it last cycle, and the cycle before that. And every time they were reading Bitcoin with a ruler that's never once measured it right. So yes, 58K gang is back, and history is rhyming. But we've stood here before, and we should know how it ends. You want to see a death spiral? Just look at the dollar. And the only fix they've got left is to print more of it. That's the asset actually going to zero. Bitcoin is the way out. And the people screaming at 58K are just handing it to the ones who know why it was built. All right, now I want to hear from you. What was the moment your conviction stopped depending on the price? And which of these terrible calls will age the worst? Grantham Zero, LaFont's Cult, or Portnoy at the bar? Drop your thoughts in the comments. And if this one connected, don't forget to like it and send it to somebody who's shaken right now. And subscribe to Simply Bitcoin so you don't miss out on the signal. I'm Hurley with Truth Block and Simply Bitcoin, and I'll see you next week.